This is Tom Kozlik from HilltopSecurities again with an economic and municipal market update. Today, Friday, September 18th, 2020. The Fed left its interest rate target unchanged this week, as most of us expected. There are two more Fed meetings scheduled for this year, one in November and another in December. Also this week, the Fed noted that they are likely to keep interest rates at zero for the next 3 years. Keep in mind that the FOMC took 7 years to raise rates after the last downturn. There was a hearing about the Fed's Municipal liquidity facility this week in D.C. It was argued that an extension of the MLF past this year makes sense, while some responded that it's unnecessary and the MLF has barely been used and governments should have appropriate reserves. This week, Lipper reported another $612 million flowed into municipal mutual funds. That makes a 19th straight week of positive fund flows for municipal bonds. We wrote this week that public finance issuers have been rushing to market in order to sell their debt before the November 3rd, 2020 election. Next week's municipal calendar of issuance is a great example. It looks like there's going to be $14 billion that's going to come to market. There's nothing new to report on the search for a fifth phase of COVID relief. Lawmakers are no closer to an agreement now than they were last week or even last month. The March to Common Ground bipartisan plan proposed earlier in the week has not gained any traction. If anything, it's probably made the negotiations a little more difficult. The House is scheduled to break after Friday, October 2nd, and the Senate Friday, October 9th. It does seem as though lawmakers are zeroing in on a continuing resolution to fund the federal government through either December or February. Thanks very much for watching. See you next week. This was Tom Kozlik from HilltopSecurities.